Hello, and welcome to Virtual Investor Conferences. My name is John Viglotti. On behalf of OTC Markets, we're very pleased you joined us for our two-day Battery and Precious Metals Conference. The first presentation of the conference is from Horizon Copper. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Irfan Kazini. He's the President and Chief Executive Officer of Horizon Copper Corp, which trades in the OTCQX Best Market under the symbol HNCUF and on the TSX under the symbol HCU. Welcome, Irfan.
Thanks so much, John, and thanks for the introduction. And very excited to be kicking things off on the conference, and very excited to tell everyone about a new copper story that's out there, Horizon Copper. We're relatively new, so not many people know about us. We launched over the last year, and I think we've got a pretty exciting story to describe and tell people about, and I think I believe we can have exceptional returns if we think we're right in our thesis, and I'm hoping to take you through and explain why we think we're right. Horizon Copper started at a time when, in my background, for people's benefit, I went to university, got my undergrad in mathematics, picked up a CA and a CFA along the way, and I was at PwC doing audits of companies, and these guys who were starting up this TSXV company reached out to me, and they were looking for a CFO, and loved the business model, and I joined that business, a decade and a half ago as their CFO, and it has a lot of parallels to Horizon Copper. That business at the time was a small TSXV company, and over that decade and a half, when I became CFO, and during that period, we grew to a multi-billion-dollar company that trades on the New York and Toronto Stock Exchange. And during that time, I did transactions, organized, negotiations and documentation in contractual terms, raised over $1 billion of U.S. debt and equity, and so learned a lot during that process. And I thought, I developed the skill set, and I wanted to bring it into a commodity that I really believed in, and that was copper. And so, worked with that company, and we created a partnership of Horizon Copper, where we are looking to acquire copper assets and become the premier mid-tier copper company over the next decade. And we plan on doing that by acquiring passive minority positions all over the world and continue to build a portfolio of these passive interests and get the diversification that you get with, a lot of assets. Unlike, other companies that may have one asset or just they're in one jurisdiction, with Horizon, you get multiple jurisdictions, multiple assets. And so if I kind of step back and I go, what is unique to Horizon Copper, and what are the key themes that I think make it a compelling story for people, is one, we're unique in the sense that we have in the company right now 3 world-class assets, and they're not the majority position, but they're minority position. They're small interests, and these assets are truly world-class. They're on, some of the largest copper mines in the world, the 3rd largest copper mine in the world, what will be the 4th largest copper mine in the world, and so on. And these assets are run by great partners, and they're run by very large mining companies like your Rio Tintos, your Teck's, your BHPs. And so I think that's another very unique thing in our story. The third thing that's quite unique to our story is the fact that, when I was, forming this company, I didn't want to just get like small returns based on copper price going up. I wasn't looking for, the copper price going up marginally and trying to get a return of 5-10%. I wanted to create a vehicle where I could get outsized returns if I was able to build a portfolio that performed as we expected. And so one of the key things we created in the company was leverage and torque. And for those who aren't familiar with mining companies, leverage can be really dangerous in the mining space. But what's unique to our leverage is the fact that it's not like other debt, in the sense that this debt that we have on our balance sheet to give us that tremendous amount of torque is held by one party, the strategic partner that I mentioned earlier. Two, it isn't owed for another decade. The interest rates are quite low on the debt. Half of it's non-interest bearing until one of our assets is in commercial production and dividend cash flows, and the other debt is the other half at 3%. So your all-in interest rate costs are only a couple percent and quite low at this time, and so that's quite unique. And then the last couple points, that there are no financial covenants. This isn't one of those lenders that is trying to own the asset. This is a true strategic partner. And we also have the ability to pay back that debt in our shares as our share price increases in value. Not a convert, but the ability to pay back that debt in equity. So if our share price goes to $1 million, you can pay back $1 million of debt with one share, subject to that strategic partner not having to consolidate our financial results. And so you have that great quality assets run by great partners and tremendous torque. And then the last thing that I think is unique to our stories we kind of go through is, from an optics perspective, I want to demonstrate to shareholders that, as CEO, I'm really invested in ensuring that, equity returns go up. And so, for the last 2 years, I've taken a dollar a year salary. And, the shares that I own the company, were all part of the public financing. So, you don't have a situation where you've got, CEO has got really cheap shares or all these warrants that they got privately that are founder warrants. So the equity that I built in the company were all open to, equity investors, retail investors, and institutionals. And so that's more of an optics of, how we're aligned with shareholders and why we think, from an optics perspective, you can get comfortable that if shareholders make money, that's how I make money. In terms of copper demand and why I was so excited to pivot into this role and push forward with the rise in copper, is I truly believe that there's a deficit coming, independent of EVs and energy transitions. But when you add in and layer on what I will believe is the next phase over the next 5-10 years of need and demand for copper, that deficit that we see coming just from general GDP growth just gets exacerbated. And so I think, it's a commodity that a lot of people are rallying behind. We've tried to build a portfolio that can take advantage of that, and I think provide outsized returns. I think at the end of the day, what's really unique to our story, as I mentioned earlier again, is the quality of our assets. We have 3 assets. Antamina, we have a 1.66% NPI royalty on Antamina. Antamina is, one of those well-known, well-regarded mines. It's one of the largest copper mines in the world, 3rd copper mine in the world on a copper equivalent basis. It's also one of the most profitable mines in the world, independent of commodity price. It's based in Peru. It's been cash flowing for many decades, or not many decades, but over a decade. And this is an asset we closed on in the last year. It's actually cash flowing today, so we receive a check on a quarterly basis. And so you've got a story in Horizon that's cash flowing today. It isn't one of those where you look at it and you go, in 10 years, investors will be seeing cash flow. Investors are seeing cash flow now. This is an asset that we think will be, operating for many years to come. Most recently, they just announced the operator of that group, Teck, in conjunction with Glencore and BHP, that they, extended the mine life by another, decade. So it now goes to 2036, and we anticipate that this is something that will be as part of the story of Antamina going forward. These extensions and mine life extensions. The next asset we have is Hot Maden. That's a 30% interest in that asset. That's a fully permitted asset, and we anticipate that asset going into commercial production in 2028. Early construction work has already begun on that mine. The third asset that we have is through our 25% ownership for Entrée. Ourselves and the operator of Oyu Tolgoi, Rio Tinto, are the two major shareholders of that entity. And Oyu Tolgoi is going to be, from Rio Tinto's projections, the fourth largest copper mine in the world by the end of the decade. So this asset is, another key asset in our portfolio that's a real quality and what we believe are high quality mines. And when you look at the quality of the mines, this slide just shows you just the cost associated with mining, pound of copper. It's, when I say world class, I believe that they're world class, not only based on size and also the projected cash flows, but also they're the first quartile. And what that means that it's very cheap to mine that asset. And that also means that it makes it a lot easier for them to add to the resource because it's a lot cheaper to mine, find potential resources by drilling. And so I think it's wonderful to launch the company with these anchor assets. Now, as we continue to grow, you'll see us add more assets to the portfolio. They won't necessarily all be first quartile, but if you've got your base of quality assets in there, I think that's pretty significant. I'm like I mentioned, I'm a numbers guy, and I think the most important thing about a company really is what are the cash flows coming back to shareholders. And this slide just demonstrates, again, our projections are all in US dollars, but this slide demonstrates why we think Horizon's a compelling story. So this shows you right here, Antamina, we anticipate $10 to $15 million US average on an annual basis. And so we recently closed that transaction. And so we anticipate at, prices that are below spot today, that should average 10 to 15 million US. And so on a quarterly basis, we just get a check. It doesn't require much effort. We receive it from Teck, one of the operators, Antamina. And then you see when Hot Maden gets up and running and we're receiving our dividends, that should be an incremental $20 to $23 million coming in. So you can see that our cash flows then be closer to plus $30 million US. And then when Oyu Tolgoi comes up and running on our portion of the ground, you're close to $50 million US. And so to me, that's compelling because that's essentially cash flowing more than your market cap on an annual basis when your portfolio is fully mature. And these aren't cash flows that in 20 years you'll see. This is cash flow in Antamina you're getting today. Hot Maden is going to commercial production, we anticipate in 2028. On the Oyu Tolgoi ground, Rio Tinto, the operator of that assets, they've already started mining on the underground. It's just a function of time, we believe, before they come onto the portion that we have our finance carried interest in. And that's supposed to be in production in 2027. And so there'll be a delay in the cash flows by a year or so coming back up to Horizon shareholders. But these aren't cash flows that are 15 years time. These are much closer. And so as a shareholder investor, I kind of often look at cash flows and I go, one, do I believe in the quality of the assets? And if you think those assets are quality, and I believe they are, then the next question you have to ask yourself is, what are the quality of the operators underlying those assets? Is this the first mine they've ever built? Are they large enough in terms of getting, bench strength, depth, specialists to deal with issues as they arise? And to me, when you associate yourself with great projects, you often get great partners associated with it as well. In our case, we've got some of the largest mining companies operating our assets and moving it forward, which I think is a real key feature in the Horizon story. And so that allows you, to build, this unique portfolio so that when commodity prices inevitably increase, or at least I believe they will go higher, you can get that re-rating, you can get the value of those cash flows coming. And so when this slide demonstrates if copper goes to $6, and I think that's quite likely over the next few years that you can get a material increase in the copper price. It just shows you, you could be in a scenario where you're cash flowing, you're more like double your market cap on an annual basis. And I think that's a compelling story, and that's one of the reasons that I quite like the portfolio. Now, mining is a risky business, and there's numerous things that can go wrong in mining. But again, if the quality of your assets are good and the competency of your partners are good and the operators are good, it helps you go through those challenges where in other scenarios you may struggle and have a low return on your investment. This slide shows you the capital structure. It goes back to the third point that I mentioned of wanting to create a company where you could get a multiple on your return. And so this is a story where you've got, $250 million US enterprise value approximately. Our market cap is tiny in comparison to that enterprise value. Let's say, 40 to 50 million US. The delta again is leverage, it's debt. The difference between your enterprise value of about $250 million US and your market cap of about 40 to 50 million US. Now, that leverage again is, with a strategic partner who's looking to help us grow. They get a right of first refusal on any precious metal streams and royalties that we sell. And so it's a symbiotic relationship. That debt isn't owed for another decade, below market interest rates, it's negative yield, and doesn't have financial covenants. So the whole rationale of creating that leverage was to, one, help Horizon finance these transactions, but also provide that torque and leverage to get those outsized returns, but never scare equity holders to go, look, this is too much debt for the company because it's so quasi-equity in nature. And so when you have that much leverage and torque, what's unique is the fact that if you get a small increase in the value of your company, all that value accretes to equity holders. And so, if you get a 10% increase in your enterprise value, over 50%, goes to equity holders. And one of the questions I get asked often is, what happens if you don't, do any future transactions? What if you, just use all your cash that you're generating to pay back the debt? And I think that's also a very compelling story as well, in the sense that more of that enterprise value, is owned by equity holders. So it's almost kind of like a mortgage on a house. As you pay the bank, you own more of that house and you get more equity into the company. I think over the next 6 to 12 months, you're going to see, good re-rating events and news stories come out on a number of our assets as more drill results come out on a number of our partners. I think that's going to be beneficial. We publicly stated that we're looking to put a revolving credit facility in place with chartered Canadian banks. You'll see us hopefully announce that. You'll also see hopefully coverage launched on us by other banks as well over the next 6 to 12 months. And so more eyes, more stories come and see this for the first time. This is a company that we took public ourselves through the RTO. So a bank didn't take us public. And so, you don't necessarily have as many eyes on it today. But as we get out there and we market the story and tell people about our Horizon, who we are, excited for people to learn more about us. This slide shows you the capital structure of the company. So we've got about 86 million shares outstanding, 40 million warrants. So on a fully diluted basis, 131 shares outstanding. Again, those warrants were part of the public financing that came with the company. They weren't, founder warrants or insider warrants, etc. They were all part of the public financing. Sandstorm, that's the 34% shareholder that I mentioned before that holds that debt. And so they definitely have skin in the game and want us to continue to grow. We acquire copper assets, and to the extent we want to sell a portion of our streams and royalty on the precious metal component, they have a right of first refusal. Again, we're not required to, but if we do, it's a nice form of a capital and cheap capital. It shows management board about 7%. I've mentioned that, I've written a 7-figure check as part of the public financing, and so I've got significant exposure to it. One of the questions coming in through the slides that I just might answer as we kind of go through, the questions come up is, are you still looking for copper assets, and are you looking to grow the company? And the answer is yes. When we launched this company, it started with 2 assets. And, a lot of people said, look, copper is really hard to get. It's unlikely you're going to get copper. It's just, I don't understand how you're going to get it done. And, about 6 months thereafter, we were able to announce that we closed the transaction or acquired that asset on Antamina. And so that's the third largest copper mine in the world. So we're industrious. We're constantly looking for assets. But the key is we're not trying to get big and grow for the sake of growth. I'm looking for share price appreciation and making sure that the share price goes higher. That's the metric that I look at. Will it add a benefit to the company? And so, I'm cautiously optimistic that over the next couple of years we'll add another asset to the portfolio, but it's not a requirement for a company. But clearly, as we try to become the premier mid-tier copper company, you're going to see us continue to look for assets and add to the portfolio. A couple quick comments about our portfolio before moving more into Q&A. I don't plan on getting into too much depth on our assets, but for people to understand the quality of these assets, Antamina, third largest copper mine in the world, recently they came out in the last, I guess, 6 months and talked about the modified EIA. This is that EIA that I mentioned that it extended the mine life. They extended to 2036, and we believe this asset, based on our site visits and due diligence, will continue to extend its mine life. These are competent operators. You can see just on this graph, just the reserve pit and how much resource it has. And the other thing that's unique to this mine is the fact is when they went and got the approval for a modified EIA, they also got permission to do a throughput expansion. And this is quite significant for us in the sense that, they got approval to go from 150,000 tons per day to over 200,000 tons per day. And that's over a 30% increase in throughput. Now, because we believe it's a long life mine, it isn't just a question of getting an increase in NAV and playing discount rates by moving that throughput forward. Because it's longer life, we think that that's really more just like incremental cash flow hitting your balance sheet. And so we're quite excited for that. Now, that's something that we don't think is going to happen in the next few years, but certainly something that they're looking at. And we're looking to announce more good results coming from that. The next asset in our portfolio, Hod Maden. This is a fully permitted mine. The operator of that asset, SSR Mining, they had previously announced commercial production in 2027. They had an incident at one of their other operations, completely unrelated to our asset. And so we think that there's going to be a delay in hitting commercial production as they sort out some of their challenges associated with that asset. And so we're telling people, look, we think there's going to be a delay. We think a 1-year delay is probably reasonable. So 2028 would make sense. But this is an asset that is truly unique. This shows you kind of like the grades on the x-axis with respect to gold and on the y-axis with respect to copper. And it's an outlier in terms of gold grades and copper grades. So we think this is an asset that will get into production. It won PDAC Discovery of the Year and truly world-class. And then finally, our last asset, Oyu Tolgoi. This is, this section that you see is the Oyu Tolgoi ground. The portion that's in shaded and darker area is that finance carried interest that I talked about through our ownership in Entree Resources. And, that to the bottom right, that orange area that you see, that represents about 17 years worth of mine life. The green area below it represents over 20 years of mine life. And Rio Tinto, the operator, says that they're going into development or probably towards the end of this year. And so this is an asset that's not like, oh, are they going to build it? It's already been built. They've actually, done the drawbells. Underground mining has occurred. So we believe it's just a function of time before they actually start hitting ground. And so, I think you're going to hopefully see more, results come out of this asset over the next year. we just announced through our partner, or our partner just recently announced some great drill results. These are the first drill results in over a decade that have come from Rio Tinto on this ground, and more drill results are expected to come out. And they're, I think, really great results, and I recommend everyone to go look at them. But this is an asset that we think is going to be cash flowing for many decades to come. And so, high level, before I move into questions, I would say that you've got a story with Horizon that's new. You have great quality assets, I think good operators, and you've got tremendous torque to the story and a management team that's really incentivized to move it forward and to get great returns for shareholders. And so with that, I might pause and just move over to Q&A and answer some of these questions. One of the questions coming through is, how will you flow returns to shareholders? That's a great question. When I was at the other company for a decade and a half, the questions I got was, okay, you built this, royalty portfolio. What are you going to be a dividend yield? Are you going to buy back shares? How are you going to get returns back to shareholders? And at the time, we told people, look, we're building out the portfolio. We're making sure, there's strength in cash flows. And once that's happened, you're going to see us not only do share buybacks and but pay dividends. And during that time, we did both. That company buys back his shares and also a yield. And so you'll see us move along that same kind of path and trajectory. One of the questions I have is, what jurisdictions are you looking to expand into, if any? And so that's a great question. I think one of the fallacies out in the mining industry is there's really great jurisdictions. And in reality, there are not really great jurisdictions. And I say that because there's issues that sometimes pop up with permitting. There's social issues that pop up. Governments may change and not might be on side. And so there is no perfect jurisdiction. So what I think you can do by minimizing the risk associated with jurisdiction is ensuring that you associate yourself with great assets that contribute to the economy, that have good social license, and also build a portfolio. That way you get this diversification. So if something goes wrong with an asset, you're not just all your portfolio and risk is associated with that one asset in that one jurisdiction. Jurisdictions you see us not go into, certainly there's parts of Asia or Africa that the risk and the risk-reward ratio just doesn't make sense to us. But other jurisdictions we're happy to look into, as long as we're able to contractually protect our investors and make sure that we're associated with good projects and operators. Question, are your 3 projects in production, and if not, when? Also, how are you able to achieve a very favorable all-in sustaining cost for your projects? Good question. I'll take the first part. I'll answer that first. Antamina is in production. So, we have approximately $15 million US on our balance sheet. That's 15. And with Antamina, it's cash flowing today. So, it's a recent acquisition. So people will start seeing that, start hitting our balance sheet, and it should cash flow about 10 to 15 million US to Horizon shareholders. Again, all our projections that we showed you was net of the streams and royalties that we used to finance that transaction. Hot Modern 2028 is when we anticipate commercial production. That assumes that 1 year delay. And then Rio Tinto has said that production is supposed to come into that Oyu Tolgoi ground that we have that finance carried interest through Entrée in 2027. And how are you able to get such a favorable all-in sustaining costs? Great assets. That's really what it comes down to. When you get such good quality assets on some of the largest copper mines in the world, you can get some great returns. And that's really why. Another question coming through is, how were you able to get some of these assets, and do you think you can get more into the portfolio? So we've kind of run out of time for further questions, but the quick answer is we have a large, access over the last decade and a half of building a solid team and developing our connections to the industry, and we find assets that other people can't, and we're hoping to add more assets over the next while. So thank you for listening to the presentation and answering or asking those